Welcome back to ZT Financial TV. Today, I'm going to discuss about the AI war between US and China and its impact on investors. We are now at the fourth stage of industrial revolution. But the question is, will it be led by the United States or China? And what does that mean for your investments? Imagine waking up in 2030. Your car drives itself. AI makes your business decisions, and the global economy is dictated by AI superpowers competing today. This battle isn't just about technology, it's about economic power, global influence, and the future of the world's economy. In January 2025, when Trump returned to the White House, a black swan event shook the financial world. The release of DeepSeek, China's AI powerhouse, wiped out $1 trillion from the US stock market in a single day. So what does that mean? This sudden market crash highlighted the growing competition between US and Chinese AI dominance, and signaled that AI is no longer just a technological race, it's an economic and geopolitical battle. Now let's talk about industrial revolutions and global power shifts. History has shown that every industrial revolution reshaped the world order. The first industrial revolution made Britain the global leader with steam power. The second industrial revolution saw the US, Germany, and Japan rise with steel, electricity, and automobiles. Then, the third industrial revolution, computers, automation, and the internet, made the US the global tech superpower. Companies like Microsoft, Apple, Google, and IBM changed the world, making the US the center of innovation and finance. But it wasn't just about tech. The US dollar became the world's reserve currency, locking the global economy into the American financial system. Wall Street attracted money from everywhere. And through cycles of booms and recessions, the Fed controlled capital flow, collecting wealth from all over the world. Then manufacturing shifted to China, and the US focused on high-tech and finance, printing dollars to buy cheap goods from abroad so keeping American living standards high. Now we are entering the fourth industrial revolution, driven by AI, and the battle between the US and China will determine the next global leader. China is catching up in high-tech, and the dollar's dominance is weakening. That's why the AI war is a must-win for both countries. If the US loses its edge, its financial power could crumble. And for China, winning AI means securing its place as the next global leader. This isn't just about technology, it's about who controls the future. Now we are looking at the US AI boom and the bubble. At the start of the AI boom, the US led the way. Companies like OpenAI, Microsoft, and NVIDIA were at the forefront. Between 2022 and 2024, NVIDIA's stock surged by 859%, and Palantir skyrocketed by 1,242%, fueled by demand for AI chips and enterprise solutions. But AI isn't just about stocks and numbers, it's already transforming industries. Baidu's driverless taxis navigate through Chinese cities. Tesla's AI-powered full self-driving competes with China's Xpeng, and governments worldwide are investing billions into AI-driven military and security technology. But is this a repeat of the dot-com bubble? Are investors overvaluing AI stocks just like they did with internet companies in 1999? And how is China changing the game? Let's mention about DeepSeek of China and cost-efficient AI. While US companies were spending billions on AI research and charging high subscription fees for models like ChatGPT $20 or $200 per month, China took a different approach. DeepSeek, a Chinese AI company, developed a powerful AI model for just $5.6 million, compared to the billions OpenAI spent on ChatGPT. And here's the catch. DeepSeek is open source, meaning anyone can copy and improve upon it with minimal investment in GPUs. For investors, this is a major red flag. Billion-dollar investments into US AI companies could be challenged by low-cost, free-to-use alternatives from China, hurting the profitability of companies like OpenAI, Microsoft, and NVIDIA. Let's discuss about US versus China turning bans into innovation. To slow China's rise, the US imposed restrictions on chip exports and AI technology sales. But instead of holding China back, these bans accelerated China's self-sufficiency. China was once dependent on US semiconductors. Now it's a global chip exporter. Alright, let's talk about where China stands in the global semiconductor game. They've made some serious progress, but they still have a long way to go in certain areas. What China has achieved. In 2024, China's chip exports hit $159 billion, a 17.4% jump from last year. They now hold 17% of the global semiconductor market, up from just 9% in 2020. That's a big leap. On the tech side, China is now mass-producing 14 nanometers chips, and has even developed 7 nanometers chips with Huawei's Kirin 9000S, despite US sanctions. In addition, SMIC, their top foundry, pulled this off without EUV lithography machines, which is impressive. For AI chips, companies like Huawei, Alibaba, and Baidu are pushing their own AI accelerators to replace NVIDIA's GPUs, since the US cut them off from A100 and H100 chips, where China is still behind. But here's the catch: they can't mass-produce 5 nanometers and 3 nanometers chips yet, because they don't have access to EUV lithography from ASML. They're also not yet competitive in high-bandwidth memory HBM, which is crucial for AI training. Samsung, SK Hynix, and Micron are still ahead in that space. And while China is pushing for AI independence, most of their AI software still runs on NVIDIA's CUDA. Shifting to their own platforms like Mindspore and Paddle won't happen overnight. How this affects global players. China chips' rise is already impacting companies like Samsung. In Q4 2024, Samsung's profits dropped 29% to $4.48 billion, partly because Chinese chip makers are gaining ground in DRAM and AI chips due to their lower-priced products. What's next? China is closing the gap, but they're still 2-5 years behind in some key areas. If they can develop their own EUV lithography, improve AI chip efficiency, and build a stronger software ecosystem, they could become fully self-sufficient in semiconductors by 2030. It is shifting from a buyer to a competitor, controlling its own AI supply chain and challenging the US on multiple fronts. So, what does this all mean for retail investors? If you've invested in AI stocks like NVIDIA, Microsoft, or Palantir, here are 2 key risks to watch out for: volatility and market corrections. AI stocks have skyrocketed due to investor excitement, but if China's AI advancements outpace the US, we could see major corrections in stock prices, shifts in global capital. For years, venture capitalists and institutional investors have poured billions into US AI firms. But if China pulls ahead, more investment may start flowing toward Chinese AI companies. Here are my opinions. DeepSeek was founded in 2023, but let's be real. No one really paid attention to it. It wasn't until January 10th, 2025, when DeepSeek made its big move that everything changed. Just 2 weeks later, on January 27th, 2025, the US tech stock market took a massive hit, dropping over $1 trillion in value. Now here's where things get interesting. Normally, when a disruptive Chinese AI model emerges, we'd expect some kind of pushback from US authorities or tech leaders, right? But that didn't happen. Instead, figures like Donald Trump and top executives from major tech firms didn't just stay silent, they actually acknowledged that DeepSeek was a strong competitor to ChatGPT. Even more surprising? Microsoft, OpenAI, Meta, and Amazon didn't fight back. Instead, they started integrating DeepSeek into their platforms. Major news outlets ran with the story, yet unlike past cases where the US might have blocked or restricted foreign AI dominance, this time, they just let it happen. What's the plan here? Now, this raises a question. Was this intentional? Over the years, countries like Saudi Arabia, the UAE, Japan, South Korea, and several European nations have collectively poured hundreds of billions of dollars into US AI firms. But now, with China proving it can build advanced AI at a fraction of the cost, these investors might be reevaluating their bets. Logically, you'd think they'd redirect their money to Chinese AI companies, right? But instead, they're continue investing on US AI through projects like the $500 billion Stargate initiative. Why? Because they have to protect their previous investments. If they stop funding US AI, the technological gap between the US and China will close even faster. And let's be honest, China is no longer many years behind. So to keep that lead, global investors have no choice but to keep funding US AI firms. It's not just about future growth. It's about protecting the money they've already poured in. Short-term correction, long-term growth. So, what does this mean for the stock market? In the short term, US tech stocks are going to be volatile. We've already seen a correction, and there might be more dips ahead. But in the long run, the market will likely recover and keep growing. Why? Because global investors aren't going to let US AI fall behind. They're going to keep pumping money into it to widen the gap with China. even if China has figured out a way to build AI cheaper and faster. The AI race isn't just about who has the best technology. It's also about who controls the money, the market, and the future of global influence. So, the real question is, where do you stand in this AI battle? Let me know in the comments. And as always, share and subscribe so you can rewatch later if needed. So, as a retail investor, how should you navigate this AI battle? Here are some key strategies to consider. Personally, I took some profit 10 to 30% of AI stocks like NVDA and PLTR, and wait to dollar cost average to buy back when they have big drops. Diversify your portfolio. Consider exposure to both US and Chinese AI stocks, semiconductor companies, and global tech leaders. Monitor AI regulations and trade policies. Government policies heavily impact AI investments. Stay informed on US export bans and China's self-sufficiency efforts. Look for real AI applications. Invest in companies that are actively using AI in autonomous driving, healthcare, cloud AI, and automation. Prepare for market volatility. AI stocks have surged, but corrections will happen. Look for buy opportunities in market dips, instead of chasing high valuations. Stay informed, keep an eye on China's AI breakthroughs, US tech developments, and geopolitical trends. Consider these AI-related stock picks: US stocks, for example Nvidia NVDA, Microsoft MSFT, Palantir PLTR, and Tesla TSLA. Alphabet GOOGL. Chinese stocks such as Baidu BIDU, Alibaba BABA, Tencent TCEHY, SMIC. Personally, I'm waiting for a bigger correction to DCA the AI stocks before entering the market, after taking 30% of profit. AI stocks have surged dramatically. And while the long-term potential is strong, short-term overvaluation is a concern. I'm not a financial advisor, this is just my opinion. Please do your own research and invest wisely. The AI revolution is here, and retail investors have a chance to position themselves wisely. So are you ready to take advantage of this AI boom? Let us know in the comments. Thank you for watching.